told you the story about driving down to Van Wert, which is probably the furthest I've driven in a while, last weekend. Filled up when I got back to Toledo, and it was almost $80 to put a full tank of gas back in my Jeep Commander. Gas prices in Northwest Ohio back above $3.60 a gallon. Right now, the current national average is about 15 cents more than a month ago. Still about 50 to 60 cents less than a year ago, but that doesn't necessarily mean paying $3.50, $3.60, $3.70 a gallon is a good thing. And I think we're still somewhat ahead of the curve from the announcement last week that OPEC was going to cut production. And in fact, going into the spring when demand is higher and over the summer, I think we're actually in store for higher gas prices again this year. Jay Young is author of the book, The Upside of Oil and Gas Investing. KingOperating.com is his company. Jay, it's always great to have you back on the Scott Sand Show.
Hey, thank you, Scott. Thanks for having me on.
Am I wrong in that assessment? It seems like maybe the markets haven't caught up with OPEC's decision to cut production yet.
Yeah, I definitely agree with that. It's going to, and prices are going to move higher, I'm afraid, this summer. You know, there's been some really big anomalies this year when you're talking about supply and demand. The big thing is that for some reason, you know, the governments are shutting us down with drilling. Companies are making more money than they ever have in regards to, you know, the shares per price and all that stuff, billions and billions of dollars, but they're not putting it back to work. You know, instead they're buying back their stock, or they're paying down debt, or you know, taking it as dividends. They're just not putting that money back into the ground, drilling new wells. So therefore, our supply is going to be down. When our supply is down and demand moves up this summer, I'm afraid prices, I don't think it may go to $5, Scott. I'm not saying $5 a gallon like it was, maybe a year or two ago. But it could easily reach $4. $4 a gallon.
And I'm afraid, unfortunately, that may be optimistic. But you're right. We're not, as a country, we're not doing anything that we've got the ability to do to reduce the prices of gas domestically, or even, for that matter, become a net exporter of gas that we have available. We could be energy independent, but we're not making those moves. Instead, the Biden administration is forcing automobile manufacturers to go all electric within the next 10 years, something that consumers are going to be kind of reluctant to do.
Right. And absolutely. I mean, you know, 60% of a barrel of oil is used for gasoline, you know, for jets or trucks or cars, things of that nature. Well, there's still a lot of products that are used for, you know, uses that have nothing to do with gasoline. So we're not going to be totally, you know. I mean, I know there's a lot of electric cars, and I know that Tesla wants to sell more cars this year than they did last year in California. They're increasing their, you know, up to 50%. They want to sell more cars this year, from 1.2 million to 1.8 million this year in California. And there's a lot of Teslas in California, no question. You see them all the time out there. I don't see that many here in Texas when I'm driving down the road, you know. But yeah, it's coming, but I don't think I think our demand for oil and gas is going to stay up for a long period of time, and we're not going to have the supplies necessary. And I just feel like that oil, you know, in our business, you know, with what we do, anybody can check out our website, KingOperating.com, or get my book. I just feel like that the oil markets are going to be here for a while. It's going to be a good solid, you know, 5 to 7 more years of good demand for oil, and I believe prices are going to be higher, unfortunately. And so, you know, people need to, you know, the reason I wrote the book, The Upside of Oil and Gas Investing, Scott, is make sure that, hey, you know what? I think you should buy oil stocks or put your money into energy right now. It's been a good time 30 days ago. Stocks are really up. Right. You're screaming the past 30 days.
Yeah, it would have been a good time 30 days ago. Should have talked to you then for some investment advice. Jay, what happens this time of year? I mean, you've been in this business a long time. We're going into the weather in Northwest Ohio and Southeast Michigan just now starting to get a little bit warmer. The demand goes up. There's a changeover into, I think, the type of gas that we're buying, the oil that we're buying and refining. Are refineries able to catch up? We haven't built a new refinery in the U.S. in more than a decade. What happens every spring that automatically, naturally, through supply and demand, drives the price of gas up?
Yeah, exactly, because it does. And we're not producing enough oil in the United States to meet our appetite. George W. Bush talked about in his State of the Union address in 2012, we have an addiction to oil. We have to have oil. I mean, it is an addiction. It's 20 million barrels a day plus, and we're only producing 12, maybe 13. We need 7 to 8 million barrels from other countries today, and we're going to need that for a long period of time. Even if you took all the gasoline cars off the road, you would still need a lot of oil from other countries. And that's what the big thing today is. You're talking about going into the summertime, people start driving there, you start using a lot more gasoline. And as the demand goes up and the demand starts going up, and that's the reason why prices go up and down. I mean, there's more about OPEC trying to waiver the price of oil and gas more than the United States. I mean, here we just try to produce as much as we can in the United States, and if our government allows us to, or financial institutions. But the big thing is with us, we don't try to fix the price of oil as much as OPEC countries that are producing more oil than they consume. They're the ones that say, well, hey, we're producing, like Russia, and I hate to use Russia as an example, but those numbers just come to mind. They produce 8 million barrels a day. They only consume 3 to 4. So they got 4 million barrels a day to sell all over the world, and that's how their government makes money. Well, and so they've got a tremendous amount of money that they can make by fixing the price of the price going up and down or fluctuating.
Yeah, the more we're paying at the pump, the more we're supporting Russia's invasion of Ukraine and countries, quite frankly, that don't necessarily like the United States, including Arab countries. We're talking to Jay Young, author of The Upside of Oil and Gas Investing, KingOperating.com. And as you look at the economy as well, it would be the first step to getting inflation under control if we could get the price of gas under control. It's an expense that Americans have to face on a daily basis. Jay, you mentioned earlier on that some of these large companies like Exxon and others could be reinvesting into the exploration and production of oil instead of buying stock back. Is that what should be happening?
Yeah, they're just not drilling. I mean, you see our rig count, and the rig count is what a drilling rig is what produces oil and gas, and oil and gas always decreases or declines in production numbers. And so if you take rigs off the market like you did during the pandemic, almost all the rigs were taken off the slate, you're not producing more oil, so your supply is going down. That's what's happening right now is we're not increasing. We're about 30-40% below today still. We're 30-40% below rig count as it was before the pandemic. So we don't have that supply coming back on the market. That's why I like our programs. We do oil and gas programs at King Operating. You can check that out. Tax benefits, monthly income while we scale the investment, or buy a stock. I mean, there's $2 stocks out there, $2.50. There's Exxon right now that's buying Pioneer. The stocks I feel are extremely cheap. Right now is a great time to buy oil and gas stocks, oil and gas programs, and the reason why is that Wall Street's just straying away from them. That's why Exxon's looking for such a big company like Pioneer Natural Resources, is because they can buy it really, really cheap. And so I feel like that, well, I mean, if you have a company right now, I can go buy an oil and gas company for several $100 million. It's like 2-3 times EBITDA right now. And normally it's selling for 7-8 times EBITDA, which means, your earnings before. So
right.
Like Ring Energy is going to make $170 million this year. Well, the value of their stock's $300 or $300 I think about $380 million. So you're looking at, $170 million they're going to make, 380. It's like 2 times, a little bit more than 2 times EBITDA, which means you can buy their stock in 2 years worth of earnings. That's crazy.
Well, those are the big companies, Jay. What does this do? And we're almost out of time here, so we got to keep this short. What does it do to the smaller operators like yours, like King Operating?
Yeah, well, King Operating, we're good because we're developing prospects now, and we're not ready to sell. We'll be ready to sell next year on some of our assets, And so it's good for us because it's just a cycle, right? I mean, I've seen fourth generation, I've seen cycle after cycle. We're going to come out of this. We're going to have some good, our partners are going to be real pleased because they came in now, they participated now. We're going to produce properties and drill and keep things going. So when the market turns back around and it's more of a seller's market than a buyer's market, we're going to be right there for them, Scott. So we're really excited. But look at King Operating, kingoperating.com. You can go on the website. Hey, tell me to send you a book. The first 5 callers that are qualified, I'll send you an autographed copy of my book.
Awesome.
The Upside of Oil and Gas Investing.
Jay Young here on the Scott Sands Show. Jay, always great to have you on.
Let's talk next week and catch up.
Absolutely.